Don't we? What, I thought the drums
I
happened.
know. What happened to our thing?
Max, you're throwing us a curveball. We usually have drums and then we come on. Anyway, this is Tradier's The Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. Warning, I've had a dangerous amount of caffeine, so I'm going to be a little amped up through this show. Thank you guys for joining us. If you want to, the topics we discuss here, we discuss further into more minutia on the Unfiltered Investor newsletter. Please check out myself and Bobby and our chief technical analyst, Mike Arnold, on that. So, Bobby, we're going to be talking to James Fishback. We're not going to bring him in. We love James Fishback, friend of the show. Great guy. He's going to talk about rates. Let's talk about rates real quick before he gets on. So we unfettered by his opinion. Christopher Waller said 3% Fed funds rate right away, which you and I both know he's obviously auditioning for the spot. Right. Do you believe that rates should be lower than where we are right now? And James is probably in the green room going, you better answer yes. What do you think?
No, I do. I think 350 is about right. I'd say 350 to 4 is about right because I think inflation is beat, but it's still fighting.
Yeah.
You know, the way that I look at inflation is it's like we're in the 10th round of a fight. You're ahead on points. And the guy's really tired.
Right.
Right. Now, I think that, I wouldn't want to see a rate hike to see you go in for the knockout. It's like you won. Just kind of back up.
Just kind of back up.
In. But, it's
like George Kennedy picking up Paul Newman and carrying him out of the ring.
Exactly.
You know the movie, Cool Hand Luke. By the way, a lot of young people
one of the best movies ever.
Do yourself a favor, and before the sun sets on this day, watch the movie Cool Hand Luke if you haven't already.
That's a great movie. But no, I do think they could cut. And I really do think Jerome Powell is being political. And I will say, because you and I know someone personally who has a friend that went to college with Powell, and he said, Powell will stare at this brick wall behind me until it breaks down and he can walk right through it. He's that stubborn. Right. So I really do think it's political. I think it's more stubborn than directly political. He's like, we're going to do what we want, not what you say. That by default ends up being political, in my view.
There's no question. And by the way, for people watching too, Bobby and I love that characteristic of being so stubborn that you'll dig your heels in and fight to death. Although it's just led him to a bad place. We can only look at this as a failed Fed 20 years from now. And I can make that argument to anybody if they want to take it. And I get no joy in it. I'm not just trying to be someone who's a fault finder. He just messed up at several crucial junctures. By the way, and I say this all the time, you guys can think that Bobby and I are full of crap and that our opinions are stupid. And I will tell you, sometimes we think our opinions are full of crap and that we're stupid. But one thing you cannot deny is that we get fantastic guests. And today is absolutely no exception to that. We have James Fishback of Iuorio Capital. He's a great man. Let's bring him on. Okay, there's the drums. That's what we were looking for. How are you, James?
Doing great. Good to see you, Jim. Good to see you, Bobby.
What's your relationship with caffeine?
It is iced latte in the morning, iced latte at noon, dirty chai at 4, and then so it's probably a total of 4 or 5 different shots.
But 4 o'clock, you cut it off, or does it interfere with your sleeping then?
No, it doesn't interfere at all.
That's amazing.
Same here, man. I had an espresso last night at 8:30.
Really? You guys are nuts.
I do a post-meal cappuccino when I'm out, because otherwise you get the itis right away, Bobby. Right? Yeah. You just can't do it. You're at the Capitol Grill in Naples. You're at the beautiful Ritz where you and I saw each other last, Bobby, in Naples. You got to have that espresso or that cappuccino. Otherwise, you're not going to make it home.
Yeah,
it's not normal. Yeah, I mean, I had it at 8:30. I was asleep by 9:45.
Yeah.
Wow. I'm amazed by that. Yeah. I actually have to, as you know, Bobby, I sometimes take a little bit of THC indica for sleeping, which, by the way, I love the fact that you can just say that out loud now and there's nobody to fire me. Sorry. Yeah. I've never even liked pot as a young person. As a 60-year-old man, now I use pot to help me sleep and it works great. James, I can't imagine you subscribe to that sort of theory, right?
I do not subscribe to the Reggie Bush indica sativa type of theory. I am happy to see that President Trump's Border Patrol and federal agents are where I am right now in D.C. patrolling the streets because we need it. There's a lot of thugs out here who need to be taken off the streets. They're terrorizing innocent people.
Well, before we talk about markets, let's talk about that because that's amazing to me. I live in Chicago still. In Chicago, to call it a cesspool pool and a shithole is giving it actually an upgrade. I mean, the public transportation has become a homeless shelter. Nobody seems to give a shit. And what I argue with all the time about Brandon Johnson, who's our mayor, is that he's doing a great job. He's doing exactly what he said he was going to do. He literally looked us in the eye and said, I'm going to make your city more crime friendly. And I'm going to do it with these 5 policies. And people voted for him. I have no problem with Brandon Johnson. I have a problem with every fool who voted for the guy because he was very upfront. Is that a reasonable thing to say or no?
It's a completely reasonable thing to say. Brandon Johnson is not doing anything that he didn't promise to do. He promised more illegals via sanctuary city.
Yeah.
He promised, of course, the continuance of no cash bail. He promised so-called justice, criminal justice reform, which is not justice for the victims, whether they be on the South Side or in the outskirts of Chicago. It's simply mercy, endless mercy for the thugs who terrorize the innocent people of Chicago. And so whether it's Brandon Johnson in Chicago, whether it's Muriel Bowser, who I think actually means well in DC, unlike Brandon, who's actually a sick individual, it doesn't matter. The path to hell is paved with good intentions. Whether you mean to do good or not is irrelevant. The truth of the matter is that Donald Trump is doing something that no one else has ever done before. He's actually cared about our nation's capital. It has a crime rate 4 times that of the capital of Mexico. It has a crime rate 10 times that the capital of Kenya. It is unacceptable that our nation's capital has become this unmitigated crime ring. I myself, I got to say it, Jim, I was almost robbed at gunpoint had I not sprinted away in one of the wealthiest neighborhoods in DC last year by 2 armed thugs who jumped out of a car. And so if I'm in Georgetown, the wealthiest neighborhood in DC, what on earth are our Black brothers and sisters doing? They're being gunned down in Anacostia, being gunned down in Northeast DC. If you care about Black lives, if you care about all lives, you do what President Trump did this week. You invoke Section 250 of the Home Rule Act, which gives the president the legal right to take control of the police, and you surge. I was just on the subway here in DC an hour ago, and I saw a Border Patrol agent on a subway where I'd never seen a police officer in years on the actual subway car, because there's lunatics that are threatening good people who are just trying to go to work, go to church, and do right by their family.
Yep. Bobby?
I left Chicago. It's coming up on 5 years now. And I still have a lot of friends, like my friend Jim, who they've kind of stopped defending it now. They defended it for a while. The other day, I saw somebody put something up on X. It was actually, it's an account called CWB Chicago. And they keep track of some of the crime on there. And it said Sunday was Chicago's 2nd most violent day of 2025. This was an August 12th post. Right. So obviously it's a previous Sunday. And I asked Grok, how many people died in Chicago? And how would this compare to a quiet day in Iraq or Afghanistan when our troops were there? And it was triple the deaths in Chicago. Yeah. Now, when we lived in Chicago, where I did, I was sort of surrounded by 2 gang-infested neighborhoods. And I was in a changing neighborhood. It wasn't a great neighborhood called Pilsen on the near South Side. And the street gang members call it Chirac. Yeah. Like these are the reporters on the ground. These are not unnamed sources. So when people get upset about the fascism and the authoritarianism of putting National Guard troops in a city, and they cite crime statistics that are lower, what's your answer?
Well,
that they're morons.
Well, I try to take a more principled approach to my progressive brothers and sisters, but I look at this idea and say, well, they're lower, but are they zero? First and foremost, are they zero? No, they are not. They are lower from a 25-year low. There have been now 91 homicides in DC year to date. There are anywhere between 3 and 5 armed carjackings in DC. A congressional intern was shot and killed last month, to say nothing about the Black men and women who face gunfire every single evening in Navy Yard or in Anacostia or in Southeast DC. So my answer is to them, yes, crime is lower, but what is an acceptable level of lower for you? Because my acceptable level is 0. 0, 0, 0, 0. 0 people being gunned down by gangs in Southeast DC, 0 people being pulled out of their car by a thug with a gun, 0 people being jumped in Georgetown for their wallet and their iPhone. That is the only acceptable level. And so if you want to play this game, well, it's retraced the recent high of XYZ. There are real people at the other end of this. Yeah. Take a moment and recognize. And I think that the truth here is that you would think that the Democrats would have learned their lesson from 2024 when they pointed at a bunch of charts and said, well, you see, inflation has rolled over. And people were saying, no, prices are 28% higher since Joe Biden took office. Inflation may be lower, but it's still continuing to go up. The second derivative, prices are still going up, even though they're going up less quickly than they had been in, say, 21 or 22. And so this idea of, no, you're not really at crime to the Black mom, look at this chart, is one, really bad. It's immoral. It is distasteful. 2, it is a horrible electoral strategy. It led to this sweeping defeat of the Democrats. President Trump, of course, as you all know, won the Electoral College, the popular vote, not 2 swing states, not 3 swing states, all 7 swing states. You would think they've learned their lesson. They haven't. And the truth of the matter is Donald Trump is doing what no Democrat politician has ever done in these big cities. He actually cares about the people in these big cities, black, white, it doesn't matter. He cares about them.
So a quick story and then a follow-up question. I had a friend who moved down here. She didn't really want to move down here, but she finally did, down to Southwest Florida. And she kept talking about she missed New York City, and she was originally from Chicago. And she said, oh, things, aren't that bad. It's all the news, blah, blah, blah. Then she went to Chicago to visit a bunch of friends, and they all had dinner. And these are residents of the city of Chicago. And she said, I just think the news is blowing it out of proportion. I don't really know anyone that got carjacked. And 4 of the women held up their hands. All 4 of the 11 women at dinner had been held at gunpoint and nearly or were carjacked. Jesus. Crazy. And these are affluent people. The follow-up question is this. Do you know, because I don't, are National Guard troops currently in the city? You said you saw one on the subway, but are they only in Georgetown, or are they in some of the neighborhoods that could help people of color who are obviously the most at risk? We'll call it black on black crime or whatever you want to call it. Yeah. They are the most at risk statistically. So do you know, and you may not, if there's National Guard troops in some of the more troubled neighborhoods?
There are. In fact, I saw a video last night of Border Patrol and FBI agents doing what should always be happening, which is community walks, walking through a community, telling people, look, stop smoking pot outside, stop with the ATVs, go inside. One Border Patrol agent said, President Trump doesn't want you smoking pot outside. Right. And so that is a good thing. Look, there's a big distinction. Look, no one should be thrown in prison for smoking pot, and almost no one is today. But turning our cities into a giant hookah lounge where you're smoking indica at all times of the day, that's not what folks signed up for when they wanted reasonable reform to marijuana laws. And so to answer your question, yes, we are seeing increased federal presence, the National Guard in all parts of DC, because President Trump recognizes that little thing called all lives matter. Every life matters. And you're right to call it what it is, Bob. It is black on black crime. We can stop apologizing. Let's stop with the euphemisms. 96% of homicide victims in DC are black. That is the truth. 92% of the suspects in those homicides are black. It doesn't change anything other than the fact that it is a serious problem that needs to be dealt with increased law enforcement, with increased presence in these communities. We also have to take a good hard look at the structural forces that got us here. There is a lack of fathers in black communities. Let's get real about that for a moment. There's a real lack of accountability when you don't have a dad in the home. There is a beauty to having a 2-parent household. Think about it from the perspective of this 2-parent privilege. If you got 2 parents at home, that's 2 sets of eyes watching you, wondering where you are at 9 p.m., wondering why you're not at home, disciplining young kids who in DC right now are running around acting like a bunch of clowns, taking guns, robbing people. The folks who beat up a man by the name of Big Balls, we know him very well, right? They were—
I love that we get to say big balls now, but anyway, go on.
They were 15, 16 years old. I mean, at 15 or 16, I certainly wasn't a saint, but my parents knew where I was at all times. And if one didn't, the other did. That is just the basic simplicity of a 2-parent household. And so when you got the fact that 80% of black kids are living growing up in a house with only a single parent, that is unacceptable. And you can draw a straight line between that and the increased juvenile crime that we are seeing. In fact, if you look at white single parent households, Hispanic single parent households, compared to white and two parent households, you also see increased juvenile activity. So let's not single out one race. What we're singling out here is the lack of two parent households that is predominantly felt by Black Americans. We have to be honest about it. We have to get real. And that is the long-term solution. But President Trump is not trying to focus on this, that, or the other, or the why, the causal mechanism. Get the crime down. That's what he's doing. That's the best thing he could do if you care about Black lives, if you care about all lives.
There's no question. So I've long argued that we basically have two problems in this country: the deterioration of the American family, which leaves a bunch of kids in single parent homes, and shitty nutrition that's gone on for about the last 30, 40 years. We fix both those things, I think it would be amazing. There's another concept I want to make. I was lucky enough to be talking to the top criminal attorney in the state of Illinois working for the government. And I said to him at one point in time, because he's prosecuting all these things, I said, when you look at all the gun crimes across every spectrum, across every race, what would you say the percentage is of these person who pulls the trigger being from a single parent home? And he looked at me kind of like I was an idiot. He goes, all of them. It's always been all of them.
Yeah.
Like there's not, it never really breaks from that, which is so amazing to me. The concept you said before about stop smoking pot on the street, every law enforcement agency in the world knows the concept of broken windows policing. It's a theory that's 200 years old. And the theory is that if you start paying attention to small and petty crimes, and I don't think someone who's smoking pot on the street should be spending 2 weeks in jail and have a $10,000 fine. I think there should be a punishment, but I don't think it should affect you for your lifelong. But I do think we should start prosecuting those things and prosecuting them swiftly. And it should not end your life. Broken windows policing works. We abandoned it. El Salvador, I'm not for completely throwing everyone's human rights out the window to get to zero so quickly. So there is a gradient scale. Did anything I say, do you have any comments on any of those things?
I agree with everything you said, Jim. I agree with everything you said. And I think the solution is when you start to tolerate little things here and there, people push the envelope every single time.
So zero question. Right.
Here's a real simple thing. If you're a juvenile in DC, if you're under the age of 18 and you are caught drinking or smoking in Publix is a different story. We know that, Bobby.
Either way, it would have worked. Public or public.
Yeah, I mean, they're both in public, right?
Yeah.
But put him in jail for the night.
Yeah.
Put him in jail for the night. Put them in jail for the night. And it's not on their record. Their first offense is they go to jail for the night for playing that. And look, it's about leadership. There's a new sheriff in town in Washington, D.C. His name is Donald J. Trump. And this is not just about getting crime down, getting carjackings down. It's also what the president has a constitutional responsibility of doing. And I don't throw that around lightly, Jim. I think you know me. I don't want to invoke the Constitution unless it's absolutely necessary.
Right.
But here's the truth. Our First Amendment gives us the right to petition our government, to tell them when they are doing wrong so they can do right. The government, for better or worse, is based in Washington, D.C. For that mom in Cincinnati, for that dad in the panhandle of Florida where I'm from, if they don't feel safe coming to D.C. because there's a bunch of lunatic thugs running around robbing people at gunpoint, they can't come here and tell the EPA, stop doing what you're doing. They can't come here and protest outside of the Federal Reserve, which we'll talk about in a moment. They can't come here. And whether you like President Trump or not, I think he's the greatest president we've had in 100 years. Whether you're a Democrat, I support your right to come to DC to peacefully tell the president or any elected official, Republican or Democrat, that they are doing wrong. You have to protect people's First Amendment rights by protecting the ability for DC to be safe. If DC is a hellscape, and right now it is, up until President Trump invoking Section 740 earlier this week, if it's a hellscape, a crime-ridden hellscape, then people can't come here and exercise their First Amendment rights of petitioning their government to get their government to do right by them and their families.
Simple. And you guys, people watching, we are going to get to markets. We're going to dive into rate policy. I do enjoy this conversation. I'm going to have one more question about it, and then we're going to pivot over to real live market stuff because it's a market show. If President Trump, I know he kind of almost jokingly, he does this to kind of get reactions. He said, yeah, maybe I'll do the same thing in Chicago or New York or Baltimore. We all know that that's a different animal because, we believe in states' rights. they're messing it up. There's no question they're messing it up. If Donald Trump all of a sudden said, I'm going to start doing this in Baltimore too, would you be, because DC is a different jurisdiction, the DC, would you be the same level of support if he said he's going to do it in Baltimore?
Gosh, absolutely. I would be. And
So?
there's two elements of it. The first is President Trump did three things, actually. He invoked 740. He has a statutory right to take control of the DC police for up to 30 days, given an emergency. And yeah, when you have homicides and shootings and carjackings every single day in DC, it's an emergency. Yeah. The second thing he's doing, he's increasing the number of federal officers on the street. DC has 36 law enforcement agencies that regularly do work here in DC, whether it's the FBI, the Park Police, the Secret Service, so on and so forth. So the president has the right to take any federal agent and put them anywhere in the country. That's the beauty of federal law enforcement. And they have a right to enforce and to prosecute federal law. So actually, carjacking can be prosecuted at the state level. It can also be prosecuted under federal code, because when you think about a car, it crosses state lines and therefore invokes the Commerce Clause, and you're allowed to prosecute carjacking as a federal crime. And so I would support the president always in using the law enforcement resources to do for the people of Chicago, New York, Baltimore, what those local Democrat mayors refuse to do, which is to enforce the law, protect all lives, and actually, for once, stand up for innocent people as opposed to guilty criminals.
Bob? Robert?
I'm just letting that sink in because I love that so much.
It's a dramatic pause.
I
hate dead air.
That was just really, really, really well said. I don't hate dead air. It kind of makes me comfortable. Let's shift to the Fed if we could. We titled the show for a very specific reason, because I think I know where you stand on this. You were actually mentioned as a possible replacement for that empty Federal Reserve seat. And we're looking at a Fed now that, I said it on the intro to this, I think they're being political to a certain degree. I think it's more about the stubbornness of the two people in charge, and I'm including President Trump in that. He wants his rate cut. Powell doesn't want to give it to him for whatever reason, whether that reason's political or not. Where do you fall on this?
Well, here's what I would say. Do I believe that 100% of what Jerome Powell is doing is political? No. That's not the standard. Is if so much as if even, and I think it's probably far higher than this, but even if 25% of his decision making is how this is going to affect Trump, how this is going to affect tariff negotiations, so on, that's unacceptable. That is unacceptable. Even 1% of that discussion talking about the political implications or how it may benefit or hurt certain political objectives is not what the Federal Reserve is supposed to do. The Federal Reserve is independent. Independent of politics does not mean independent of criticism. The President of the United States has the same First Amendment right, Bobby, that you, Jim, and I have. He is allowed to criticize the Federal Reserve for doing the wrong thing. And the Fed, make no mistake, is doing the wrong thing. Since Donald Trump took office, headline CPI has annualized 1.9%. As we all know, the Fed's inflation target is 2%. We can disagree with that target. That's their target. It's 2%. Inflation is below the Fed's target. And for 5 straight meetings, they have refused to lower rates. They were lowering rates up until the moment President Trump won the election. That's the path they were on. You'll remember, Bobby, right before the election at the September Fed meeting, they cut by 50 basis points, 0.5%. That was the biggest cut in 4.5 years, even though inflation was higher then than it is now. Right. So if that's not political, then what is? Oh, and by the way, let's look at the institutional backdrop here. For every one Republican economist at the Federal Reserve, there are 10 Democrat economists. For every dollar donated by Fed employees, 97 cents goes to Democratic candidates or causes. So you have the circumstantial, and then you have the causal, which directly links their actions. What my firm, Iuorio, did last month is we sued Jerome Powell in federal court on a very simple premise. If what you're saying is true, if you are actually not being political, then release the transcripts of your recent meetings, all 360 or so pages, so we can actually see what your deliberations are. If not, you're hiding something. Americans deserve full transparency. We get it from our courts. We actually get it from Congress, believe it or not. We actually know what the debates are like on the floor. We know from every federal agency they're required under the Sunshine Act to deliberate in public view. The Federal Reserve seems to think they're above the law. They are not.
Yeah. And I'm going to
So
say something
just
too about
real quick, Jimmy,
you
just
go,
real
you
quick.
go.
We
Yeah.
spoke to Texas State Representative Briscoe Kane yesterday.
Love saying
And
that name. Briscoe
yeah,
King.
it's just a great, you were dead on about it being like a cowboy novel name, Briscoe Kane. But anyway, I asked him a question about, the actual political nature of redistricting. Was it actually to help the people of the state of Texas or to help the parties in charge of the state of Texas? And I thought he had a great answer. He basically said, look, you cannot take the human out of the human beings that are involved in this particular circumstance. And that's why when I hear Jerome Powell say it's not political at all, I just don't believe him.
I don't
Because
believe
that's taking the human out of him, because he is a stubborn guy by direct hearsay that we've heard from people who know him.
Correct. He's a very stubborn guy. You and I know, we know that person who worked at the Federal Reserve. And again, the numbers don't lie. By the way, if the institution was as one-sided Republican as it is actually Democrat, that would be a problem. You do not want an echo chamber to the right or the left. You want a good marketplace of ideas from good, high-quality thinkers on the left and the right. And so very simply put, the only thing that would be worse than Jerome Powell is maybe Elizabeth Warren going in there and being openly political. But I got to tell you the truth. I'd actually rather have Powell say, look, I am political. Here's why I think Trump is wrong, as opposed to this holier than thou. There's not a political bone in my body. Well, then did you vote in the last election?
Yeah.
Did you?
Then there is.
Because if you didn't vote in the right, I mean, if you did vote in the last election, you do have certainly political preferences. And so this is why you need to have rules-based monetary policy. Even if you don't believe that everything should be a model, Powell should be forced, Jim, at every meeting to open that meeting and say, today the FOMC met and we decided to do XYZ. Before I get into that, I want to tell you what the Fed model said we should have done and why there is a deviation between 30 to 40 years of monetary policy modeling about what we should have done and what we actually did. There needs to be some objective standard to which they are being compared to.
Yeah.
Fed independence does not mean independent from accountability or transparency.
No.
These people have been wrong at every single term. So enough with the holier than thou from Jerome Powell. He needs to accept accountability. And where's the apology? Has he ever said, I'm sorry for taking 18 months to raise rates when we had the worst inflation since the 1980s?
No. And by the way, the three of us, this is not rocket science. We could get together and algo the shit out of this in about a week's time, come up with 20 different data points. One of my data points would be that September 50 basis point rate cut. The moment he did it, 10-year yields shot through the roof. The market was the judge and jury on that cut. And they said, you're being an idiot and this is an inflationary cut. If the three of us were in there and that market reaction happened and lasted more than a couple of days, we'd be like, oh shit, our model just said you got to take back at least part of that cut because the 10-year yield is saying that we should not. Again, it is not rocket science. Okay, back to markets now. The markets believe that, again, it is not unreasonable to think that the pendulum swings in both directions and may overcorrect. So I believe we're going to go from a period of, and I think we are a little too tight now, but I do worry that if a Christopher Waller comes in who really wants badly to impress the president, has told him that I want lower rates, and I think that's one of the reasons the stock market is reacting the way it is. Do you think that's a bad thing too, if that happens?
Well, I think it's only a bad thing if you're pushing for lower rates for anything other than the economic facts and fundamentals. Right. I mean, Chris Waller says definitively, this is a guy who's a PhD trained economist who ran the research department of the St. Louis Fed, who is obviously in consideration for Fed chair, but he's right. Neutral is probably at least 150 basis points lower, maybe 200 or even 250. Powell himself at the big Jackson Hole Symposium, which is next week in Wyoming, the big annual research conference at the Fed, he in 2019 had a speech about R star. That is the natural rate. If there were no Fed, where would interest rates naturally settle?
God, wouldn't we love to find out? But anyway, go on. Yeah.
Right? The end of the Fed. Wouldn't we love to find that out? Well, Powell actually was quite honest. I loved that speech at the time because he said there's no way to really measure what the natural rate is. The only way to know natural is to look at where interest rates are currently and see how the real economy is responding. If you got interest rates X level and growth is below potential, mortgage originations are down 74%. If you've got the fact that inflation is actually below target as opposed to above target, that tells you that the level of rates is above the natural level and therefore should come down to the natural level. The opposite is also true. If rates are, say, at 2%, and you have inflation above target, you have growth above potential, you have mortgage originations far above the 5-year rolling average, that would then tell you that monetary policy is too loose because it's below natural and you should bring it higher. And so look at the facts. Mortgage originations are down 360,000 quarterly this time versus 4 years ago. We have the economy that is actually below potential relative to where it could be, given the supply side reforms that the president is pushing through. And obviously the fact that inflation is below target. And so when you combine that policy mix, that macro mix, you have only one conclusion, which is that rates are too high. Remember, Jim, rates right now are 4.5%. When Powell originally put rates at 4.5% at the December 2022 Fed meeting, you know where inflation was? 6.5%.
Jesus, Mary and Joseph. Yeah.
Right? How on earth does it make sense that the same level you put rates at, inflation was 6.5%. Now inflation is literally 1.9% since President Trump took office. That's an annualized headline CPI figure. I'm sorry. I'm not taking out food and energy. I'm not some progressive panickin who takes out the actual necessities of working class folks in my state and somehow tries to distort the numbers and do this cherry picking nonsense. No. Why are you taking out food? Why are you taking out energy? President Trump is delivering on the energy agenda. He's getting food prices down. He's getting oil prices down. That's a good thing. That should absolutely be factored into the equation. And so at the end of the day, inflation headline CPI has annualized 1.9. Since Trump took office, there we are, lower rates, do the right thing. And guess what? Trump has actually said this. He's actually an honest person, unlike Jerome Powell. Yeah. He said, quote, very humble the president is. If I am wrong, Mr. Chairman, you can then just raise rates afterward. Isn't there a beauty to that? If we're wrong, Jim, if you're wrong and I'm wrong and Bob's wrong and Bob's wrong and everyone's wrong, and there's actually inflation in 4 months, then just raise rates. Trump's not going to fault you. No one's going to fault you if you make an honest mistake and then you have to reverse policy.
Yeah. And that, like back in September, what I said, when he lowered by 50 and the 10-year told him he was wrong, we would have just, our model, when you're the Fed chairman and we make up your committee, we'll haggle the shit out of that thing and we'll have a stopgap how we can make it right if we do something wrong, which we might. But by the way, we'd have to take a quick time out here. Luis or Max, can you put up the banner? If you guys like this show, and I know you do, the feedback we get on is great, and I appreciate that so much. Please try for 3 months Tradier Pro options trading platform. The banner will be up in 1 second. All you have to do is scan the code and it'll be 3 months free. We talk to options traders all over who say this is the absolute best system, whether they're experts, novices, or just beginners. So sometime during the show, within the next couple minutes, we'll put up the banner. Please just scan the code and give it a try. Bobby, back to you.
Yeah, there's a couple of technical difficulties in the background. So, for example, Tradier, who is the sponsor of the show, is the one that put up the James for Fed share, but it was actually a comment from Carmona because the guy in the background, Max, had to log out and log back in, so all his chats disappeared. This particular one is from Remo. It's stock charts on Twitter.
Remo's our buddy, yeah.
Yeah, so that's a question for you, James. I also want to say that's why the banner didn't come up, Jimmy.
Right.
So, James, that's a question for you. The Fed cuts rates in September. Do you see it as a 1% catch up?
Or a quarter point cut?
Oh, I mean, there's a
quarter
big difference
50,
between,
I guess, is the real question, right?
Yeah, the real question, you know, I was an interest rate derivatives trader, as you guys know, big Eurodollar guy early on, now obviously a SOFR guy, given the transition away from LIBOR. If I were trading the Fed right now, if I were trading the October Fed funds futures contract, which as you know is predicated on the outcome of the September meeting, so the market's pricing 23 basis points of cuts. I think there's almost certainly going to be a 25 basis point cut because they looked at that jobs report, which there's a whole separate issue there, but they looked at that jobs report and said, this thing's starting to crack. I vehemently disagree with the methodology. Again, separate issue. I think there's a chance they cut by 50. They'll almost certainly cut by 25. What they should do, as opposed to what they will do, is also fascinating. They should have cut at the March meeting. They should have cut at the May meeting. They should have cut at the June meeting. They should have cut 2 weeks ago because they were totally wrong. They were totally wrong about tariff-induced inflation. They were completely wrong about that. And the honest, humble thing to do is to say we were wrong. We should have been cutting as soon as the March meeting. That's 4 meetings. 4 times 25 is 100. There should be a 100 basis point cut in September, and frame it as a catch-up move. This is not the beginning of a deep easing cycle that's going to bring us back to 2008 levels of zero lower bound rates. But why are we doing it? That's how I would frame it. And if they were intellectually honest, which of course they're not, they would look and say, we made a mistake at March. We made a mistake in May, June, and July. We should have cut at those meetings. President was right. There was no inflation pass through from tariffs. Who's eating the tariffs are exporters. What they're doing literally is they're just lowering their prices by 20%. The importer pays the tariff. And so there's no economic effect whatsoever. The only people who are hurt are the profit margins of Chinese exporters and Vietnamese exporters. That's it. And so that's the resolution. We get a little bit of a fairer trade system, and that's where we are. And so realistically, 25, decent chance of 50. But what they should be doing is cutting by 100 as a catch-up move.
Tell me this, James, and this is an honest question too, because if you're definitely saying, and right now you're in the outside looking in, you're not the Fed chair, and you're saying you would cut by 100 basis points at the September meeting, would Bobby and I still have jobs if we were sitting on either side of you going, wait a sec, we got to think if this disrupts the market? I know you trade SOFR. I've traded SOFR for my career and Eurodollars as well too. Do you worry that there could be like a what the hell's going on, disruption of markets, craziness that could ensue from 100 basis point cuts? And would you fire us for disagreeing with you?
No, I wouldn't. I enjoy debate. I think debate makes us better. Iron sharpens iron. Yeah. What I would say is just thinking about monetary policy announcements over the last decade, it really matters how you frame them. So if you cut by 100 and then downgraded the growth outlook, that would be massively bearish for stocks, because you're saying we are cutting because we project economic weakness. If you framed it the right way, the honest way, which is we are cutting because we made a mistake, we are still holding our GDP target the same because we were wrong about second quarter GDP. It came in higher than expected. We are cutting as a catch-up move. That is the honest thing to do. If you signal that to markets, yeah, somebody would lose some money because they were short some naked SOFR calls on the September and the December contract. But at the end of the day, the Fed has to set monetary policy for working class folks, for retirees, and for small and large businesses, not for some traders in the pit and some hedge funds in New York and London. And so I think if it's structured the right way, it's signaled the right way, you could absolutely deliver that, so long as you were consistent that this is a catch-up move, as opposed to saying this is a move in response to what we view as economic weakness. That would be wrong. It would be dishonest, but it would also send the wrong signal to markets. And so I don't just buy this idea. There have been multiple times where the Fed has cut, this, Jim, where the Fed has cut and the markets rallied, and the Fed has also cut by the same amount and the markets have sold off. The differentiator between those same exact cuts and the market impact was how the Federal Reserve Chairman framed those rate cuts.
I love it. So, Bobby, when I'm shouting across the conference table at James saying you could do the same thing with 50, who are you siding with? And you have to be honest here. James can take it. Yeah.
I want to put up, actually, I want to read a couple of Widges comments in here. And then I have a screen share I want to share. I don't know if they'll be able to be put up, but Widges' first one was, Powell has screwed up at every turn since he came into office and maintained Yellen's unprecedented double tightening. Powell is a wreck, but I just disagree that inflation has improved enough. Then I drop down to, we have a shortage of owner-occupied homes. This is a separate thing.
Oh, this is good. And James has written about this, but this is
we have a shortage of owner-occupied homes. That's why mortgage originations are never going to recover. Too many homes are out of circulation and held for rent ransom. James, you want to comment on that before I go to the third one? Because then I want to put up a screen share for the third one.
And your policy. You have a policy that I really like about this too. Anyway,
yeah, I do too.
Yeah.
Thank you. Yes. So there's two elements to it. When you lower rates with varying coefficients to all parts of the economy. Yes, lower rates brings about lower mortgage rates, but lower rates also brings about lower rates for home construction companies. And so if you look at the survey data from the National Association of Home Builders, they'll tell you that a top concern for them is high interest rates. They would be building more homes if rates weren't near 20-year highs. And so at the end of the day, when you lower rates, yes, you're lowering the mortgage payment, but you're also making it more attractive. You're incentivizing home construction companies to build new supply. More supply, as we all know, leads to lower prices across the board. The also issue about the shortage of housing is that a lot of folks are locked into 2 to 3% mortgages that were acquired in 21. I have a 2.3% mortgage. I acquired it in October of 2021. And so I'm not selling my house anytime soon. Now, if mortgage rates came down to where if I sold my house and then bought another one and I was able to only get 3%, that would obviously change the equation. And so a lot of supply, you know this, Jim, a lot of supply is never going to come on the market at 7% mortgage rates, because if you sell your house, your mortgage rate triples overnight. And that is the fundamental economic reality behind it.
That's going to be taught in business schools for 100 years.
Yeah,
how the rapidity of raising mortgages from 2.5 to 7.5 in 10 months time does nothing but make the prices scream. Sorry, Bobby.
And then forget it in New York, because the two biggest cities with the biggest housing shortages are San Francisco and New York, and they're the ones with rent control.
And they regulate the shit out of any construction. They're out of their minds.
You're completely discouraging construction. The last thing Widge said, and this is, Max, where I want the screen share up when I'm done reading this. The inflation rate of food was held down by the deflation of junk food. The stuff we're supposed to eat is pricing out the working class. Now, I just want to make a comment as I share this screen here. Goods inflation is actually what is coming close to a deflationary cycle. It's services inflation. This is work from Mike Singleton of Invictus, and I do have permission to put this stuff up. But if you look on the bottom, goods inflation is 1% annualized. Yeah. Services inflation is starting to creep back up because that's wages. And I'm not really sure, I haven't looked into it as to how much of this is, you know, the expulsion of the cheap labor being replaced by more expensive labor. How much of this is still carryover from the catch up of the Biden administration's 9% inflation. And by the way, I'm just marking that on time. I'm not trying to blame that on President Biden. That's a whole other conversation. That's just a time marker for me. And so when I look at it, we
will blame him if the time comes. Anyway,
yeah, if somebody brings it up, I'll blame him. But that's not what I'm doing by calling it that. So goods inflation is actually annualizing right now, Widge, at about 1%. Now, when you talk about the stuff we're supposed to be eating, pricing out the working class, myself and I'm sure Jim have kind of become mini experts at telling people how to eat whole foods in an affordable way. So, for example, my wife I'm going to go and eat it when we're done here, made a picanha, which is like $9.99 a pound. She throws in the oven, she slices up the fat, tastes like freaking prime rib. It's amazing. And then in terms of vegetables, first of all, you can grow a lot of your own. I'm not telling people they should do that if they live in a rural area or an urban area. But there's a lot of ways where you actually stop buying all the crap you used to buy and just buy the amount of whole foods you need to eat. And all of a sudden your grocery bill actually drops, even at today's prices.
Yeah.
James, go ahead. I'm sorry to hijack your time here.
Well, I love the picanha, and it's a really nice food hack. And
I've never even heard of picanha until about 6 months ago. Is this a new fad?
It's a Brazilian cut. It's sirloin.
Yeah, it's sirloin, but it's a whole sirloin with the fat cap left on it.
Really
That's what a picanha is.
Yeah, I like the fat. Yeah.
Oh, it's amazing.
Yeah.
Gosh, it's one of those things, Bobby, that there's so much at play here, right? So part of this whole Fed dilemma, the creature from Jekyll Island, right? Part of this whole dilemma is, okay, food inflation's high. What is the Fed supposed to do about that, right? How are higher interest rates going to bring down ground beef prices?
I have an idea, by the way. Do you want me to answer that question? Because I know it's hypothetical, but there is a real thing. The Fed chairman should talk about the regulatory effects that the government is doing to stifle production in so many different industries.
Absolutely.
Very economic thing. But anyway, go on.
What he's saying, that's not a Fed action, though.
No, but it is. It can be. If you become Fed chairman, you'll stand at the podium and say, listen, here's what we're doing. Here's what the federal government can do as well. Stop regulating the shit out of beef producers. Sorry to jump in there. It's the caffeine. Go on, please.
No, you're absolutely right. You're absolutely right. Now, the Fed chair would do that, but the Fed chair currently only knows how to comment on things that are related to Donald J. Trump that he believes are negative. He will not comment on anything else. This is the same Fed chair who egged on Nancy Pelosi in October of 2020 and told her, you rather go big on fiscal spending than spend too little. He only wants to comment on fiscal policy when it can somehow be used against Donald J. Trump. So I agree with you. The issues in meat processing, in factories, in food really stem down to regulation and increased taxation, which of course gets passed on to the consumer. There's nothing about the Fed funds rate. There's nothing about the 2-year yield that is going to bring down beef prices or dairy prices or poultry. It's just a fact. We got to be honest about it. And so I think the point is what the president has done is he's enacted a fiscal policy that is disinflationary. Remember that beef has to travel across state lines. So when you bring down energy prices the way he has done, and they're going to continue to go down with this new energy permitting structure from the big, beautiful bill, what he's done is he reduces the input cost, which is, of course, the diesel fuel that it takes to drive cattle across state lines to slaughter, then to drive that ground beef into a grocery store, into a meat packing facility, et cetera. And so the Fed chair should be honest about what he can and can't do. And so I guess my question would be to Powell is this. You say inflation is right around the corner. What yardstick are you actually looking at? And what would it take for you to admit that you're wrong? Because you've been wrong for 6 months. We had tariffs go on in some cases as soon as the president took office in January. And there's nothing. In fact, to your point, core goods inflation, Bobby, is now bordering on deflation, which is the pre-COVID trend. And so not only is there not inflation, there is the exact opposite. And I'm sick and tired of Larry Summers, Paul Krugman, and Justin Wolfers being a bunch of cherry-picking panicans and trying to drive everyone into a hissy fit about inflation that has yet to and will not materialize. The Fed is being held hostage by a pointless, baseless theory. And as a result, they are holding hostage Americans who have done everything right. They've worked hard, they've saved up, they are ready to buy a home, and they can't because mortgage rates are near 24-year highs. Powell can't do anything about it. He can actually just be honest and say, I can do something about it. Sorry, I can do something about it. I am sorry for what I've done. And lower rates. The problem is he is a stubborn mule.
Yeah. So I will add that you mentioned Paul Krugman, Larry Summers, Justin Wolfers. I'll throw in Jason Furman, Austin Goolsbee. I know each of those people, I think all of them personally. I've been on shows with them. I've met them. Hell of a nice guys. But if you went through the last 2 years of the Biden administration and you said that we have a good economy, that's a fine opinion. If you somehow justify the fact that we were racking up another $1 trillion of debt every 95 days, if you can explain that, then I will listen to you talk about the quality of the economy. As soon as you can't, it just means you're a political hack. Do you agree with that? Of course you agree with that.
Well, I agree with it. And I think these are generally good people. I think they want what's best for the country.
Yeah.
And what's best for the country is then for them to log off for the next 90 days, go hiking, and stop trying to drum up all of this excitement. Stop being a bunch of panicans with all the histrionic nonsense and let President Trump do his job. There has not been inflation for 6 months. So why were you wrong? Why were you wrong in the last 6 months? And what suddenly is going to change? What precise causal mechanism from inflations that is being paid for as exporters are lowering, foreign exporters are lowering their prices, reducing their profit margins, which, by the way, got way too fat. There's no excuse for these companies in China. People say, oh, well, the product is going to go up by 200%. No. The import price is going to go up by the percent of the tariff. They are paying $5 for a pair of tennis shoes. They are charging you $800 or $80, whatever the case is. They are eating that. We are compressing Chinese profit margins. Great. That's fine. And then deliver the revenue. And by the way, the revenue has been insane. The revenue has been unbelievable. We're going to do $300 billion, Bobby, by the end of this year. Jim, that means we'll do $3 trillion, maybe even $4 by the end of the decade. This idea of an external revenue service is not far-fetched at all. I think there is a world in which we go back to the pre-income tax regime of sourcing a real chunk of our revenue from the very people across the world. They don't have a right to participate in our market. It is a privilege. You are going to pay for that privilege, and you're going to pay the American people for that privilege because we can lower income tax rates and then tariffs can make up the diff.
And by the way, James isn't just talking out of his ass here too. We've had some very high level people, and we've talked about it, the Unfiltered Investor, for a long time, is that historically speaking, the exporting country tends to subsidize the industry being tariffed. Historically speaking, the exporting company tends to reduce their margins. And that's before it even gets to our shores. Then when it does get to our shores, Occasionally, the importing company has to reduce their margins as well to remain competitive, which, by the way, that's what Elizabeth Warren, you were all screaming about, to reduce their margins. And only then does it get to the consumer. There's 4 things. And we didn't even talk about how currencies sometimes reevaluate based on it as well. So this is history speaking to us. So what did you call them? Panicans? Is that what you said? I like that word. I'm going to use that like I made it up. All the panicans saying, well, this is 100% inflationary. It's a tax on everybody. Maybe, but maybe not. And usually not. Bobby?
Yeah, I want to go back to some questions. Again, we're really behind on these because of our technical difficulties. And our buddy Tim is here again. And Tim says, in today's world of AI, shouldn't we just relieve all the Federal Reserve employees and use an algorithm?
Well, no, because we're going to be the 3 employees, Tim. I want to make
3
money
of
from the
us
government.
and an algorithm. And Tim, you'll get great deals on your commercial real estate stuff too. We'll figure that. That's going to be on the side.
We need to be in charge, Tim.
By the way, James may actually have that position someday, so we're freaking kidding. Just so everybody knows, you might have a position that could. Never mind. I'm going to get him in more trouble.
It's all a joke. Exactly right.
Tim also has another comment that I think was interesting. He says, "Guys, we all know the Fed can't lower mortgage rates," and of course, he's technically correct. So, what are we talking about? The sort of mechanism for this would be with the Fed.
Yeah.
3-year arms.
So there's of course the Fed does not set the 30-year fixed rate mortgage rate, but the Fed does set the overnight Fed funds rate. The overnight Fed funds rate compounded over a period of time is what sets term rates. There's a reason why when the Fed moves, the 2-year yield moves. 99% correlation that same exact day. There's a reason why when the Fed moves, the 10-year yield, which is used to price a 30-year fixed rate mortgage because the average duration of said mortgage is roughly a decade, there's a reason why that happens. And so empirically, Jim, if we go back to 2000, there have been 5 cases in which the Fed lowered rates and the 30-year rate went down. All five cases where they did that, and the mortgage rate did the exact same thing. Was it a 1-for-1 move? No, it wasn't. But this is the same Jerome Powell that in 2020 and 2021 was expanding the balance sheet by buying MBS securities in an attempt to compress the spread between the MBS rate and the comparable Treasury rate. And so, no, the Fed is not literally setting my rocket mortgage rate, but they are influencing the conditions for mortgage, whether it's through the balance sheet or through the Fed funds rate. And so the Fed does in fact influence every interest rate in the economy. Is it a 1-for-1 relationship? No. The coefficient may be closer to 0.4 or 0.5. But to say, Tim, and I think it's a fair point, it's a fair rebuttal, to say that the Fed doesn't set mortgage rates, is it a coincidence that the Fed funds rate is near a 20-year high and the 30-year fixed rate mortgage is also near a 24-year high? No, it is not. Is it a coincidence that the Fed had the lowest rates right after the pandemic and mortgage rates were at the lowest levels in 30 years? No, it is not. And so there is a relationship. It is not a 1-for-1 relationship, but Jerome Powell threw the kitchen sink at the mortgage market after COVID. Why? Because a bunch of hedge funds owned a bunch of mortgages and he wanted to close the bid offer spread and take toxic assets off of balance sheets and bring risk premia, as we call it in markets, down. I'm sick and tired of hedge funds in this country running the show at the Federal Reserve. If Jerome Powell would field calls where I'm from in the panhandle of Florida, folks who have done everything right, who've been looking to get a mortgage for 3 years now, as opposed to BlackRock CEO and the CEO of hedge funds all across Wall Street and London, and said, this is a real crisis. Why don't you expand the balance sheet? I mean, I'm not saying that you should do that, but if you expanded the balance sheet by $2 trillion, a large portion of which went to buying literal mortgage-backed securities in the face of a crisis, why don't you expand the balance sheet now? It's a crisis, I believe, that mortgage rates are at a quarter century high.
I'm going to just kind of disagree with you because I don't care that much if we brought the Fed funds rate down to 2.5%, like you're advocating, and 10-year yield stayed at 4.5, even went up to 4.8, and 2s10 steepened out, we could just get back to a point where people were getting great deals on 2- and 3-year arms and then rolling them at the time when the Fed does have a lot more control of the short end. Do you see a period of time where that could happen?
Oh, absolutely. I mean, yeah, if you want to go to the floating rate argument, absolutely. I mean, 10% of mortgage origination happens at the 2 to 3 year floating arm rate.
And it happened in our lifetime where everybody was doing it, right?
Correct. I think there's just an interesting, and you may disagree with this, Jim. I respect the heck out of your opinion. I'm curious what you think about, though, of this idea that the Fed clearly can spend trillions of dollars buying mortgage-backed securities. The Fed clearly can justify that because you want to you want to compress mortgage spreads and bring down mortgage rates relative to treasuries to bring down mortgage costs. They did that after 08. They did that after 2020. They did it for financial market reasons. If you can do it for financial market reasons, why don't you do it for real economy reasons?
Well, because I think there's a risk. And by the way, when we're having our meeting at the Fed, we will have this argument. I think there's a risk if the Fed starts buying bonds again and increasing its balance sheet that you are devaluing the dollar in some way, and not as it measures against the index, as a measure against shit, as a measure against Bitcoin and gold and eggs and beef. And I think if the Fed starts buying bonds, it could be deleterious. I'd rather go with my plan first, but that's how we would hammer it out at our conference table with our new Fed.
There would actually be genuine debate, as opposed to, again, everyone says, oh, the Fed's a democracy, they vote. No, it's not a democracy. Yeah. Russia, I kid you not, Russia is more of a democracy than the Federal Reserve Board of Governors. Here's why. We got 2 dissenting votes against Jerome Powell at the Fed meeting 2 weeks ago. Oh, there's only 2 votes. There's 12 people. There were 2 dissenting votes, Jim. That was the most dissenting votes we've gotten in 3 decades.
Yeah.
3 decades.
30 years.
There have been more dissenters to Vladimir Putin in 3 decades than there have been against Jerome Powell. I'm sorry, I'm not defending Putin. I'm not defending the Russian authoritarian regime. But at the end of the case, enough with this idea. Oh, and by the way, here's the perfect comparison, Bobby. The Bank of England met last week. They had to vote twice because there weren't enough votes. They literally had to vote twice because
here's the interesting thing about that. One of the interesting things about that is not only they voted twice, and then they voted to cut rates, and the pound strengthened because of the dissent.
I love that.
So you can actually have lower rates and your currency can strengthen because they know it's a real debate, so the currency becomes more valuable in the economic conversation.
I love that. That's great. Bobby, what do we have more housekeeping stuff before we ride us out?
Yeah, I got one more question I want to ask you guys. I meant to ask the outlaw hero Briscoe Kane this yesterday when we spoke to him, and I did ask him, Jimmy, after you had to leave. But I want to ask both of you guys this question. I am a free market guy, but I don't like foreign countries buying farmland. I don't like Bill Gates buying farmland. And something I know has been in Widge's craw, I don't like BlackRock and anybody else buying single family homes. But to oppose that, to me, is anti-free market, anti-capitalist. What do you guys think? I'll go to James first.
And then I'm just going to say what he says.
It's a really good point, Bobby. They say, well, if you're a capitalist, if you're for free markets, why aren't you for Blackstone coming in and buying single family homes?
Right.
There's a values debate to be had here about what do we value more as a society. There's also an argument here that what Blackstone is doing is not a free market. Very simply, here's why. Blackstone's largest foreign investor is China. In August 2023, they advocated for their Chinese counterparty to be able to invest, high net worth individuals and Chinese-backed institutions to invest in their U.S. investing unit. They then take foreign dollars from a communist regime, that's not a free market, invest it to buy single-family homes. Oh, and wait, when they buy those homes, the profits from those returns, from the rental payments, are they taxed at the same rate that a landlord would have? No, they are taxed at the carried interest performance allocation rate, the carried interest loophole, which is 20%. They're not charged the same way a small mom and pop landlord would be charged at nearly 40%. So on 2 counts, the first count of sourcing Chinese investment dollars from a communist regime violates the free market principle. And on the second count, they are not being charged the same tax rate. They are cheating by having a 20% tax rate. That is half the rate that you and I would pay if we were small mom and pop landlords. And so it's not the free market thing to do, number one. And one, what do we value more? I don't view a single family home as another trade and investment portfolio. I view it with dignity. Home ownership in America is a precondition for success. Homeowners in America, Jim, they are 42 times wealthier than renters. And the reason why is you could easily blow $2,000 a month on rent and at the end of 30 years have nothing to show for it. But you blow $2,000 a month on a mortgage payment at the end of 30 years, Jim, you're going to own that home. No, you're going to pass that home down to your children and they can pass it down to their children We have a generational wealth gap in this country. And at the end of the day, what we have to be able to do is create conditions for Americans to succeed. There's a great chart from my friend Nathan Hasenblatt of New Founding. Everyone's seen this chart. I'm sure you guys have as well. It's the number of Americans who are 30 years old who are married and own a home. My dad was growing up in the 1960s. Half of 30-year-olds, half of them were married and owned a home. Today, less than 15% of 30-year-olds are married and own a home.
It's crazy.
That is the most important chart in America. Nothing about the stock market, nothing about nominal GDP, nothing about corporate profits matters unless that chart inflects higher and we can get back to 50%. That is the backbone of America, is the institution of the family. Marriage is between a man and a woman, and home ownership is reserved for Americans, not Blackstone, and certainly not foreign investors from China.
So real quick, so you just saw Widge's comment. He really liked this part of the conversation. He's been talking about this for months and months. Tim says, please realize all the homes that BLX bought over the past 18 months are underwater. I asked a really close friend of mine who's also a very astute market participant who moved down here from Manhattan about a year ago. And he said to me, the one thing about those guys buying those homes is they will dump them. They will dump them a lot more quickly than a person who's emotionally invested and has bought a home for their family like James just described. So we'll see if that's going to happen, if they're all underwater. I know Tim knows his shit, so they are.
Well, by the way, Tim brings up a really good point, but they're underwater if you only view the house as an investment based on price appreciation. If you view the house as a cash yielding instrument, which is how Blackstone views the house, they're not buying that. Make no mistake. Blackstone is not buying this house, refurbishing, putting in new tile and saying, oh, you're a couple, you have 2 kids, you want to have 4, here's a house. We're going to only charge you 10% more. If that's what Blackstone was doing, like my parents flipped houses after 2008. They had no choice because my dad got laid off. They had some extra cash. They liquidated a retirement portfolio. They bought houses on the cheap and they flipped them. They didn't become these predatory renters, right? Predatory landlords who only rented homes into perpetuity. And so, yes, many of these homes are below the market, but as we joke, Jim, in markets, it's not underwater if it's a long-term investment. Quite literally, for Blackstone, it is not a trade in the way you would buy a bond and then sell that 10-year bond futures in 2 weeks. It is a bond that they are holding up until maturity. And so long as they can source rental payments out and increase rental payments over time, we can't actually know whether or not they're underwater. I don't think they will be underwater because they've effectively cornered this market. They now own 460,000 homes. And a lot of people, Justin Wolfers included, will say, well, that is 0.0. First off, it's the entire housing stock is not the right denominator here. The right denominator is in that particular metropolitan area. What percentage of homes are private equity firms buying? Then you become the marginal price setter. That's the secondary argument. The first argument, every home that Blackstone owns, nearly 500,000, should not be owned by Blackstone. It should be owned by it should be owned by a family. End of story. End of story right there. So forget the price appreciation. I can prove that out with logic. We can debate that till we're blue in the face. We'll win on that argument. But if Blackstone owns a home, by definition, a family of 4 does not own that home. That is wrong. That is un-American. It has to end.
And Bobby, I will add too, the fact that they've had favorable borrowing conditions, favorable tax status to build this position over the last few years is absolutely unforgivable. So, and I agree with 80 to 90% of what James said. So first of all, we get rid of those. And then we start thinking about tax situation that favors someone who owns their home as a primary residence, someone who owns 2 homes as their business of being landlords versus the huge companies. I mean, we have to, because for rates were so favorable for 30 years and 40 years. And after that, even more so for Blackstone and BlackRock, it built up these enormous concentrations, not just in housing stock, but in companies too. You borrow and then that takes away the small business from it. It takes away the smallest person at the fringes. And again, I'm trying to talk quick and screwing it up because the producers, I'm sure, want to get the hell out of here. Because
just real quick, Jimmy, before you talk us down or out or whatever the hell we say, Ecclesiastes next week. Join us again with those same questions. We're just out of time, dude. I'd love to,
get all the questions.
I'd love to get all your questions in, but we just ran out of time.
Yeah, we ran out of time. James, thank you so much. Where can they find you on Twitter? Right?
They can find me on Twitter, James Fishback, just how it sounds. Of course, we have our anti-DEI ETF. I would be remiss not to bring this up. This is our S&P 500 ETF that excludes the 38 companies in the S&P 500 like Nike and Intel and Airbnb and Starbucks that are playing woke games and losing investors' money. If you want to keep hiring on race and gender with your DEI policies, we exclude you. And we exclude you for the very simple reason that you are going to underperform if you hire people on the color of their skin and their self-identified gender, as opposed to what they can bring to the table.
And the content of their character. The content of their
character, Jim.
Jim, what's the symbol of that?
It is, the ticker is SPXM, Sierra Papa X-Ray Mike. Seen record inflows over the last 3 weeks. Doing real well. The first of many from Iuorio. But Jim, I thought you had a great point on the tax treatment. That's the thing. By the way, if you get rid of and I say this as someone who ran a hedge fund, the reason I took advantage of the carried interest loophole. I should have paid hundreds of thousands of dollars more in taxes than I in fact did, not because I was doing anything wrong, but because there was a loophole for hedge funds and private equity firms that, like everyone before, I took advantage of. And so if you end the carried interest loophole, they can't be as profitable by cheating the system. And then maybe you solve the problem right then and there. You don't have to do anything else.
Hell yeah, exactly. Make it a level playing
field.
We gotta go. I gotta go. I got a conference call. I'm 10 minutes late for. This has been Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. Thank you guys so much for all the input you guys give. The questions are fantastic. We always realize we have smarter people watching the show than Bobby and I are actually hosting the show, and we love that. We're fine with it. Please join us at the Unfiltered Investor to see us talk about more of these topics. We are having a great time with that. Thank you guys very much.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.